But, it would be 500,000, 600,000, 700,000 per Bitcoin.
As you know, I was a skeptic. I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong.
If you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those local fears.
As you just saw, BlackRock is no stranger to shilling Bitcoin, but this new move is shocking the markets. This comes just as Trump's White House Crypto Summit is coming in a few days. This is going to be a big 24 hours ahead of us. But what was BlackRock's move that shocked the markets? And will the White House Crypto Summit pump the market, or will it be a sell the news event? If you hold crypto, you need to see this. Also, just before we go any further, this channel has a daily giveaway of 1 million Shiba tokens. To enter, all you have to do is be subscribed to this channel, like this video, and comment hashtag Shiba Inu. Good luck. BlackRock, a global investment firm with $11.5 trillion in assets under management, has added its Bitcoin exchange-traded fund to its model portfolio product.
And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it.
Portfolios that allow for alternative assets will be able to put a 1% to 2% allocation into the firm's iShares Bitcoin ETF trust, potentially creating new demand for the exchange-traded fund. They revealed this along with a report on their advisor center on the BlackRock website, Why Bitcoin? A perspective from model portfolio builders. I have summarized the best parts of the report. Bitcoin has long-term investment potential and can provide diversification benefits in multi-asset portfolios. Rising geopolitical instability, sovereign debt concerns, and demographic shifts may drive further adoption. A more Bitcoin-friendly regulatory environment could unlock further innovation and investment. Investors should first consider whether Bitcoin has intrinsic value before thinking about portfolio allocation. Why now? The launch of Bitcoin ETFs in 2024 made investing in Bitcoin more accessible and reduced operational challenges. Inflows into Bitcoin ETFs suggest growing institutional interest and increased market maturity, Bitcoin's volatility and market evolution. Bitcoin's historically high volatility has been a concern, but as institutional adoption grows, market depth and price stability are expected to improve. Bitcoin's volatility is still high compared to traditional asset classes, but has been decreasing over time. Investment rationale. Bitcoin is seen as a potential store of value, a hedge against US dollar hegemony, and a play on the digital economy's expansion. Its decentralized nature makes it resilient to censorship and governmental control. Unlike gold, Bitcoin's supply is fixed at 21 million, creating inelasticity to demand surges. They even say in a quote, to illustrate how few available Bitcoins there are, if every millionaire in the US asked their financial advisor to get them one Bitcoin, there wouldn't be enough. Despite skepticism, Bitcoin's unique properties, scarcity, decentralization, and financial utility offer intrinsic value. As global markets become more digital and debt-laden, Bitcoin's role in diversified portfolios may strengthen. Also in other news, Bitcoin open interest has fallen to its lowest level since August last year, according to Glassnode data. Open interest represents the total funds allocated in outstanding futures contracts, effectively measuring the amount of leverage in the Bitcoin system. Open interest at multi-month low. Bitcoin futures open interest across all exchanges has dropped to about 413,000 Bitcoin, the lowest level since August 2024. This marks a significant decline, indicating a major reduction in leveraged positions in the Bitcoin market. The plunge in open interest carries mixed implications for the crypto market. On the bullish side, a low leverage environment can make the market more resilient. With fewer highly leveraged positions, there is less risk of cascading liquidations in the event of large price moves. The recent price rebound being spot-driven, not leverage-fueled, is a potentially positive sign, as it suggests Bitcoin's recovery was built on actual buying interest rather than temporary short squeezes or excess speculation. Historically, declining open interest has often coincided with market bottoms in crypto, similar to the fear and greed index, like we spoke about in yesterday's video, where I said we could be ATR a local market bottom. Past instances show that when leverage is washed out, it can mark a turning point. For example, in August 2024, Bitcoin's open interest had plummeted to multi-month lows as the market sold off. Bitcoin was trading in the $50,000 to $60,000 range at that time. This leverage purge set the stage for a major recovery. Over the subsequent months, Bitcoin rallied to around $100,000, a new all-time high. Analysts noted that the last time OI was that low, it signaled a market bottom, preceding a sharp price surge. In essence, the flush out of speculative positions in late summer 2024 created a healthier baseline for the next bull run, and a similar pattern may be unfolding now. Indeed, market observers often point out that a steep drop in OI has historically preceded strong price jumps. That said, context is important. A low open interest environment is bullish only if it is followed by renewed buying interest. Persistently low OI without new demand would simply mean a lack of participation, a quiet market that could drift sideways or even downward. This is why traders look for confirmation signals before turning outright bullish. The crypto market is still in a bull run, confirmed by our bull run tracker indicator, which you can see on screen now. I explained how this works in more detail in my last video, but you can see it just now anyway. It's a great way of tracking the market, and you can get it for completely free by joining my Telegram group, linked in the description. Also, the Ethereum Pectra upgrade live on testnet, but mainnet may face delays. Ethereum's highly anticipated Pectra upgrade was successfully deployed on its final testnet, Sepolia, marking a major milestone in the lead-up to the mainnet activation. However, potential delays remain as developers continue to address outstanding issues from a previous testnet failure. Ethereum's Pectra upgrade has gathered significant community support as it aims to improve Ether, staking, Layer 2 network scalability, and overall network capacity. Pectra was successfully rolled out on its final testnet, Sepolia, on March 5th. The upgrade, which consists of 11 separate Ethereum improvement proposals, went live on Sepolia with a perfect proposal rate, according to core Ethereum contributor Terrence. The Ethereum Foundation previously confirmed that once both the Holsky and Sepolia testnets are successfully upgraded to Pectra, a mainnet activation epoch will be chosen. However, the upgrade was activated on the Holesky testnet on Feb. 24 and failed to finalize. This may mean Ethereum developers will further delay the mainnet launch as they investigate the issues. Investors expect more information on the final date of the Pectra mainnet implementation on March 6th during Ethereum's all-core developers call. Developers now anticipate that it will take at least 18 more days for the Holsky upgrade to finalize, with issues related to correlation penalties and validator balance drains still under investigation, Terrence noted. Pectra may pave the way for staked Ethereum ETFs. Industry watchers are expecting Pectra to be a transformative upgrade for Ethereum. One of Pectra's most exciting aspects is that it may pave the way for the first staked Ether exchange-traded fund, according to Ilya Kalchev, dispatch analyst at digital asset investment platform Nexo. Pectra aims to significantly improve staking flexibility and could potentially pave the way for staking to be integrated into Ethereum exchange products, the analyst told Cointelegraph, adding, Grayscale's ETF staking proposal aligns with Ethereum's broader efforts to boost staking adoption and highlights how institutional players are positioning themselves to capitalize on Ethereum's evolution. With competitors like Solana gaining traction due to faster transaction speeds and lower costs, Pectra's innovations could bolster Ethereum's appeal, attracting further institutional participation, he added. Institutional appetite for Ether staking products has been growing since Donald Trump's victory during the 2024 US presidential election, partly due to expectations of a more crypto-friendly regime in the country over the next 4 years. A Trump administration will likely embrace more crypto industry innovation, including the debut of the first staked Ether exchange-traded fund, according to Edward Wilson, an analyst at Nansen. He added, as the regulatory environment will likely be pro-crypto, we may even see a staked ETH ETF approved early in this new administration. All very bullish news coming out at the moment. If you want to know some of the best crypto to buy now, then check out the video on screen now.